1, 2, 3, 4 weeks steady down on indices. Like they got hammered. I don't see that as capitulation. I don't see that as the bottom. I don't think we're done going down. Okay. But I just want you to think in terms of when do we slow and pump the brakes about taking new shorts. In instances like this, we're in a deep discount. It doesn't mean I wouldn't take a short if it was really set up. It just means that you don't want to take heavy shorts. Don't do maximum leverage. Don't try to marry the idea that you're absolutely right, because these are times where we can start seeing wicked intraday reversals where it's just running on short-term buy side just to acquire new shorting positions by smart money, and then another dump lower. We can get a lot of these reversals, intraday, and then we're looking at a weekly chart. Let me drop down to a daily. We can start seeing a lot of these types of candles here where we have wicks and tails on both sides of it. It can do that a lot in here, all in this range here, because we are at a deep discount and everybody is looking at the market that hasn't traded short. They're wanting to be short now. It's obvious to them that the market's been wanting to go down because it's already happened. That is the classic street money perspective. And that's why I'm trying to teach you as a student of me to look at the market in that way. From a sentiment standpoint, they like patterns. They like to be confirming something. They like to have confirmation that what they're expecting in terms of the market being bullish or bearish, it needs to be in the chart for them, or they won't trust it because they don't know what it's going to do next, because they don't know where the market's likely to be drawn to, whether it be liquidity above or below the marketplace or an inefficiency.